So every trader has their strategy. They use Fibonacci, trend lines, smart money concepts, whatever strategy you use. What you have to remember is every day starts at the same time and every day follows the same pattern, which is Asia session, London session, New York session. Each session has its moments of volatility. For example, if you're trading a USD pair during the Asia range, it's probably not going to move as much as opposed to a New York open. And time of day is crucial because at different times of the day, you have different volatility. At different times of the day, you have different liquidity pools, and at different times of the day you have different types of manipulations. This births the idea of the daily cycle, and the daily cycle is a very detailed and advanced way to look at the market. And the way you think of it is if price goes up from higher low to higher high, even if it just goes up, there are many ways it can go up. Think about it. You can have Asia range consolidating, London goes lower to grab liquidity to come to a demand area, and then New York goes up and it's a continuation to make the new higher high. That could be one roadmap. Another roadmap could be Asia range consolidates, London goes high this time, and then you bounce down to the Asia midline, and then you have the New York reversal. That could be another roadmap. So the outcome was the same. You went from higher low to higher high, but it presents in different ways. And you'll start to realize there are many types of daily cycles, but certain one of them that are very predictable, very tradable, and very high probability. This is a topic that no one speaks about. This is a topic that no one even knows is important, and therefore nobody understands how to even make use of it. But I'm here to tell you, if you can master the understandings of Asia range, the clarity you will have approaching a London or New York session will always be greater because you'll understand the liquidity, the traps, the structure cycle, liquidity cycle, and therefore the daily cycle on a much higher level. So let's go back to basics and let's build the block of Asia range, which I'm sure most of you have never done, but I'm sure if you take the time to understand the power of Asia range, the most neglected and ignored session, you will start to realize it can be very powerful. So if you've watched some of my case studies, and I've done many breakdowns, many chart examples, and I've gone through so many of my public signals where I documented each one of my trades, the live call outs, and publicly documented over 55% gain across 60 signals. All of these case studies I've done, all of these signals that I've done, all of these videos on my YouTube channel that I've done, I'm always following the same approaches. And one thing you'll recognize is all of my trade models, they start around Asia range. Because I know that I could be in a supply zone. I could be on a daily supply zone I should be looking to sell. But you can have bullish days inside of a supply zone. You need to know when the market is going to reverse. And when I started to think more on the session drives the day and then the day drives the higher time frame, I always knew that if I want to take that swing trade, if I want to understand M15 price action, I better understand M1. I better understand the Asia and London and New York session, because the session movements drive everything else. Everything is downstream of this. All of my trades follow the same blueprint, the same trade models, and it always starts with the range of Asia, the liquidity pool that Asia presents being the first manipulation of the day. Then I need to find the real inducement of the day, align it with a trend, and align it with session volatility. All of my signals, all of my trades, and the millions of dollars I've made from the market is following this blueprint. So the first thing to establish is the Asia range. The Asia range, first of all, for your own information, convert it to your local time zone. But in UTC+1, so British summertime, is going to be from 10 p.m. to 6 a.m. So in this time window, I draw a box for Asia range. Or you can just get the indicator that I custom coded for myself to find the Asia range, to find the Frankfurt Open, the London Open, the key window, the New York Open, my key window. And I have a lot of other things in here that I utilize that are important to me. For example, the session movement. On average, how much does a London or a New York session move? So I know my TP levels, they should be in line with the average movement. How much does the Asia range on average move? All of these things you should be able to know and identify, and know the liquidity pools: previous day high, previous day low, previous week high, session low, X, Y, Z. So this is how I start, and this is the framework. So every day when I see Asia, you've seen it in all my case studies, price always interacts with Asia. You will shoot for Asia high, you will shoot for Asia low. You're always using that as a liquidity pool, and it's every day. And if you scroll back pretty much every day, you have the range of Asia. And then when you sweep the Asia high, you have movement. When you sweep the Asia low, you have movement. This is a day in, day out cycle, and you see me do so many videos on this. Another example here, you have the Asia low, sweep, reaction. You have the Asia high, sweep, reaction. This is how the market moves. Now, every Asia high and Asia low is not a significant liquidity pool. That will always lead to the big move of the day, but it's a liquidity pool nonetheless. So a lot of people reach this point and say, okay, Asia high and Asia is a liquidity pool, and I'll factor it into my analysis, and that's great. But there's more to it. There is more to Asia range than just understanding the liquidity of the highs and the lows and maybe the midline. What you need to understand is the nature of the Asia range and what it's trying to tell you. So let's draw a few examples on how Asia range can present. So let's say in this example, Asia range is consolidating. So you just see price went up and down and is inside this range, which is consolidating inside the range. And that presents our Asia high and Asia low. So naturally what's going to happen when you come into the next session is prices maybe going to shoot lower, interact with that liquidity pool, maybe climb higher for London into a supply zone. So when you come into the supply zone, which is the trend is bearish, you might get the New York session being bearish, like so. So then you had the interaction that Asia low became the liquidity for London to fuel the move higher. When you took Asia high liquidity and arrived to a supply zone, New York session became bearish, which was the trend. So the higher time frame trend played. Market went bearish from a supply zone, normal stuff. But Asia range played an influence. So a lot of traders go from Asia high to Asia low sweeps, but what's going on in the Asia range? Because there has to be more information. So one is the simple consolidation of the high and the low and becomes liquidity pools. That's the easy one. That's the one you should definitely use right away. The next one is going to be, let's say Asia starts off forming the high and the low. So we come into the rest of the session and it just simply does this, like so. So if you've established the Asia range like this, the high is well established because we have two touch points, one here, Asia high. Asia low is established like this. So we can call both Asia high and Asia low liquidity pools. However, we've also got more information here because we can see this is a trend line. So what is Asia range convincing people of? Convincing people, hey guys, buy. The session is going to be bullish. London session is going to lead into buys and it's going to invite market structure traders to get in over here. It's going to invite trend line traders to get in over here. Maybe a Fibonacci trader from here, all kinds of traders. And especially if this is aligned with other time frame trends, this is going to be inviting buyers in. And that's how the market works. It invites liquidity and takes liquidity. Asia range is going to invite liquidity for the London traders. It's going to invite them and say, hey guys, look to buy. And if we arrive into price where this is a demand area from the previous day and we have a bullish reaction, traders are going to come in and look for buys with the trend. And they're just going to look for buys like that. But what's the reality of the market? Rather than getting these people hit profit, they'll rather take their liquidity that's going to be around this trend line. And what you will often see is price will come into Frankfurt and maybe go high, invite more buyers in. And as London comes in, we shoot low. And then London shoots low. What do people think? Asia high sweep, bearish break of structure, making a new low, etc., etc. What happens then? Price maybe even fulfills that and starts to go for the Asia low and goes here. And now London traders are thinking, yes, we've had the demand zone taken out. We've taken out this trend line. We are bearish and so forth. And what happens? New York comes in, market whipsaws and goes like this. So the same thing, Asia high and Asia low. But what became the trap vehicle? It was also this trend line. So you'll start to see Asia ranges building narratives. And that's the key. You need to see before you enter London, before you look at the higher time frame and trends, you need to say, what is Asia trying to make London traders do? Not just the high and low, but what is the narrative inside of Asia? And that could be a case of simply doesn't take Asia high liquidity. It sweeps this trend line and goes higher. So now the people that are waiting for the sweep of Asia high, they're going to start selling. They're wrong. The people that are waiting for Asia low sweep, they never got in. And the reality was the trend line that was presented became the trap, and the real demand area that price played into was this one. There is plenty of evidences on my channel of exactly this. So you need to know how to differentiate between an Asia high and Asia low sweep day, for example, the one I mentioned here, versus a day like this where the sweep of Asia high and Asia low wasn't important. The narrative of Asia range was. So what else can we see from not just Asia low, Asia high, sweep and trend, or another opportunity where it's against the trend, it's against the Asia high and Asia low, and it's actually using Asia range, the trap that was built within. What other kinds can we have? We can also have the Asia range that is going to get the high and low established, like so. Then you're going to have a narrative where you're having a consolidation, like so. And then price is going to shoot low like this and then come out like this, and then we end our Asia range. So what is going on over here? Well, first of all, trend line traders are going to be interested. You're going to see also break of structure traders. They see this lower high. They see the structure points over here. They see the equal lows. They see the run of liquidity. They see the bullish push out, and they're looking to buy. So people are going to be entering on this area. People are seeing this trend line. People are also seeing this equal lows. So there's a lot of participants that are involved. And if we bring all of this back to basics, let's say we mark out the liquidity pool, we mark out this trend line. So now we have a few things going on. So what's going to happen when the session opens? The buyers that are entering on this sweep over here, bullish break of structure, they're going to be entering here. So we feed them. Then we see price comes to the trend line. People are going to sell. We feed them. And then what happens is price starts to consolidate. People are laddering in the entries and maybe shoots for Asia low. So what happens here? These people that thought Asia low equal lows liquidity sweep, we give them a reaction. and we take out the people that saw this trend line, saw the break of structure, they started to sell, we take them out. Now what's happened is price has seen equal lows, the real sweep in a Frankfurt Open, let's say, price comes to them, gives them a little reaction, sweeps everyone, and then goes higher. So what happened here? It wasn't just the Asia range sweep low and push out. No, there was traps inside of the session. Asia range built traps for everyone to get confused. And then you just boil it back to market structure and you say, oh, price did a higher high, higher low, higher high. What's the confusion? That's the point. People get confused on every time frame, every moment, on every pip. People are getting in and out. That's how the market moves. So the market's going to build traps, invite people to get in and take them out. Every single strategy. It doesn't matter because every strategy works at times and fails at times. And the market's inviting and destroying. So when you start to build out the real understanding of not just the pattern of Asia high, Asia low, or the pattern of head and shoulder, or the pattern of market structure, rather the essence of what was the narrative in Asia that made me go wrong. Another one could be, let's say the previous day did a left shoulder, and then you get a consolidation over here like so. And you build the range like this. You maybe even build Asia high, and then you get a clear head. And then price comes out, even gives a push out to make equal highs. And then we start to build like this in the session. So what's happening over here? Certain people are going to be seeing this as the left shoulder. This is the head, and they're looking for the right shoulder after the neckline has been met. So an inverted head and shoulder trader. What is another trader thinking? They're thinking equal lows, sweep. Perfect. There's also going to be people seeing that equal highs, sweep, break of structure, selling over here, stop losses here. So there's all kinds of narratives, once again, inside the range. Consolidating ranges are where liquidity is found. If you're just moving bullish and the market is just going up, nobody's getting trapped, no one's getting confused. The market is simple. In these zones of consolidation is where people take losses, where the market shakes everyone out, and the real moves, the real market movements are derived from these portions. Consolidations lead to movement. Consolidation is where orders are built up, and that's an accumulation before an expansion. Before a trend, you always get consolidation. You always get traps. You always get liquidity. This is the essence of the market. And if you don't know how to read this, you'll get it wrong. So you could be the trader that's thinking inverted head and shoulder, the equal lows, run of liquidity, and then let's say London just does this. You could say, oh yeah, it was Asia low, sweep, move out. No, it wasn't just that. It was also that the traps were happening inside Asia range. Smart money trader got it wrong. The left shoulder trader got it wrong. Everybody gets it wrong. And then you add in all the types of strategies with EMAs, RSIs, Ichimoku clouds and everything. You're going to see traps all the time. So I'm saying all of this, not because just follow a pattern. Understand the essence and understand when things are looking suspicious. See the traps, wait for the traps to get taken, and then take action. Now, these are certain patterns and models. I'm not going to go into every single one, but the last two I want to reserve for a specific key component, and that's going to be deeper than the two I've just shown you, and that's how to read the Asia range, not just from the macro of the highs and the lows and the traps, rather the intricacies of what's going on inside. So if I zoom into this Asia range right here, and I see what's going on, I might see it as price just went like so. Price did the one that I mentioned earlier, which is building the trend line one. So I see, okay, very simple. I see price has built a trend line. I'm going to wait for the inducement of that trend line and look for a reaction. That's simple, but it's also not enough. You can't just take Asia range and add patterns to it because patterns don't move price. Liquidity moves price. So you need to read this deeper and say, okay, this is what I'm seeing. Let me investigate it further. And you should start every day like this. Investigate your Asia range and look for the core pieces. What are these core pieces? Number one is going to be structure points. If I can see a trend in Asia, that is going to be helping me. If I can see the higher highs and higher lows, I want to be utilizing that to my favor because then I say price is trying to show buyers to get in. So I need the buyers to get stop lossed before the buy happens. Or I need to use the buyer's liquidity to therefore meet into a sell and then sell into that liquidity. You're using that to your favor. So trend is going to be number one. Structure points is the first thing you need to look at. Now, let's say we are focusing on the intricacies here. So when I focus on this zone, what do I see? Let's say as the same price action happens, but price is doing normal bearish price action. It comes in bullish, but what it does here is it does a bit of consolidation before coming higher and then affirms that level, induces it. So what I've seen over here is not just higher high, higher low. I'm also seeing that this area built up liquidity, induced liquidity, before continuing on. So then I see, okay, there's information here. And then price came back down, did a mitigation, and continued higher. So now I've not only seen higher highs and higher lows, I've identified an inducement, and I mark out that inducement as a level of protection because I know this is an area price can bounce. Not the main trade of the day, but can bounce. And second of all, I know who's in control. I can see the buyers are in control. And it's furthering an analysis because if I can see imbalances, momentum, inducements, this is showing me control of the session so that when I lead into the next session, London, I can see who's in control, who's maintaining control, and when that control switches hands. And that's the key. You need to see when you're taking a sell, are the sellers in control? Because if you're taking a sell and the buyers are in control, you're going to get a stop loss. Now, on the opposite, if I see this buildup of liquidity, I see this run of liquidity maybe, and then inside the price action, I see this. Just healthy, normal price action. Price doesn't even break structure. I know that this area is not a real inducement. It's just a higher high because there's lack of energy. If price made a lower low and had large imbalances and large momentum, I know it's an inducement. But if price is giving conservative price action, choppy price action without even a break of structure, I know this is a fake level and it will get taken out. So what is this telling me? The sellers tried to grab liquidity and failed. The buyers grabbed liquidity and succeeded. Who's in control? The buyers. So I'm maintaining the level of control. Now when I see prices coming into this area, and then I see price does not do an inducement. It just respects the previous level, makes a higher high. What is that telling me? The buyers were heavily in control. The buyers maintained control, but they didn't do any inducements. They are getting exhausted. So when I see price is doing something like this now, price starts to come out into the next session and I start to see consolidation like so, a small one. Okay, I see price is doing a small range of high and low. And I see this area of demand because it made the higher high. I expect price to hold this level, right? And then I see price coming into this level, and then I see price do something like this. Price comes in, it does a sweep of this level, and then breaks structure lower. What am I noticing here? I'm noticing that the buyers were in control here, had a break of structure. The sellers tried to gain control, but they failed to break structure. Buyers continued, buyers continue, and then price is coming into the next demand area. But who's really in control? We had a build up, we had an inducement high, and a reaction low. So when you see this, you say, okay, this demand area, is it real? Is it going to hold? Because the sellers maybe are in control. And when I see that, and I get a reaction over here, and then price comes to this protected area, then I know that the inducement is controlling. And this inducement was controlling price to come here. Now this inducement is controlling price to come lower. So when I'm seeing price comes into this demand area, if I do this whole demand area, let's say, on a higher time frame, maybe even a demand area, I'm likely to think this is going to fail. And if I just see price do this, lower high, lower low, lower high, lower low, I know that I shouldn't buy on this demand area because the sellers have induced and they are in control. And then when I see price induce Asia range, now I see price buyers are going to get in. Now I see buyers interested because of the sweep of Asia range. And then I see consolidation. I mark it out again. I mark the high, I mark the low. And then when I see prices coming in, we don't do an inducement low. We start to come higher like this and price comes back into the range. What are people thinking? We've had a break of structure, bullish push out, look to buy. What am I seeing? I'm seeing prices come in to the previous lower high that made the lower low. We've come into that small M1 supply. And what's happened is price has failed to induce low. Price has failed to show me buyers are in control. So I see this as a trap. And then I see price goes, induces high, just like it was following the momentum of this inducement. We've had another inducement high. Price will inevitably follow that inducement and go lower. So even though we induced Asia range and a demand area and we had a bullish break of structure, we failed. And now when I look at this more objectively, I see range, liquidity of stop losses and Asia range. And then I see consolidation. And then I see inducement low. And then I see bullish break of structure. I'm now actually interested because I have the favor of Asia low liquidity, this trap liquidity of the fake breakout. Then I have this range. I have the final inducement and then a bullish break of structure. Now I'm actually happy to buy when price re-enters in my London session to come higher. So when I see this objectively, I can say, oh, it was just a pattern of Asia low sweep, break of structure, entry. But really what happened was the traps in between. And what's more important was the law of cause and effect, the inducement to read the session. I then just have to go back and say, where are the inducements? Buyers in control, sellers not in control. Buyers are in control because the price went higher, but no inducement. Weakness. Sellers induce, take control. Sellers induce, take control. Buyers induce, take control. If you view the market like this, if you're zooming in all the way to M1 to notice these details, you don't trade each one of these. No, you build it into a narrative. You align it with the higher time frame. You align it with higher time frame trend, higher time frame liquidity. But this is the essence. You read the tape. You read price. You read each candle and you build it into a narrative. And the best way to see narrative is who's in control. And what's the best way to see control? Not just breaks of structure, not just higher highs and higher lows to say buyers are in control. The inducements show the truth. And if you see price action day in, day out, and you follow it like this, it will reveal more clarity. And you've seen me do this countless times when I'm picking a random day, a random Asia range. What do I notice? It's the build up, inducement, move out. That's how price action is going to move. Despite the trend line, despite the lower lows, inducement was key. Let's find another Asia range. This kind of Asia range, what's happening over here? We had slight trend line, inducement, low. What's happening over here? Build up, inducement, push lower. Build up, inducement, push higher. It's the same thing again every day. And you need to know not only how to read it, you need to know how to use it to your advantage. On a day like this from earlier in the video, what am I seeing? Nothing. I'm not seeing inducements. There's not real momentum in the market. I'm just seeing price went higher, lower, higher. I can use that information because I see lack of control from buyers. I can do this every single day, day in, day out, and you can use the information that price is presenting you from this. What is price telling me over here? That not only did price go lower, it showed me control from the build-up, inducement, mitigation. So this is showing me real control, and that level can be important. And you need to follow this every single day. So first of all, use Asia range. Second of all, use Asia high and Asia low. Then third, utilize the different types of traps that happen. And then last of all, the most important, use Asia range details. The inducements within on M1 that might seem irrelevant, they don't lead to trading opportunities, but it's information you can use as you approach the next session. You can better understand the traps from understanding the tug of war of buyers and sellers and who's in control. Don't take a buy if you see the sellers are in control. Don't take a sell if you see the buyers are in control. The narrative is built from the M1 of control. And that's why we always say, read price action and then add that information into your checklist and then add these restrictions to take sensible trades. And as always, a restricted trader is a profitable trader.